Hi, everybody. It's Ken Winans and Stephanie Larson from Winans Investments, and we are coming up on the 6-week mark between now and the end of this, shall we say, rather interesting year that I think for most of us we'd like to try to forget about. But we thought it'd be important just, you're shaking your head. I mean,
True.
yeah, there's definitely more gray in my hair than there was at the beginning of the year.
Yeah.
But I thought it'd be good for us to talk about the things that we finished up on, what we're looking at for the rest of the year, and try to give you some thoughts of things that you should consider between now and when we hopefully talk to you about your year-end reviews in January. So first off, generally speaking, earnings season with the holdings that we had, knock on wood, came through okay. There has been some adjustments due to valuations, especially with healthcare stocks, but as far as I'm concerned, the trends are still intact and we're moving forward there. The election was pretty much as many people thought it would be, split government, which historically is typically good for the investment market. So that's a positive. And then last but not least is, you know, I've been talking about it all year long, seasonality in the market. If you haven't read my last three Forbes articles, you might want to go back and read them because it talks very much about seasonality. And the simple fact is that even in bear market or mediocre market conditions, the last 2 months of the year typically are positive. And also, it's very unusual to have two back-to-back bad Januaries. So remember, January of 2022 was awful. I'm expecting that since the news is baked into the cake on economic news and everything else in the world at this point, that we should expect January to probably move forward on that. Stephanie, anything you want to add?
I'd say also that stocks that have gotten really hit hard this year, we do expect money managers to take advantage of that, or just managers. Like Meta, for example, is a good example. Meta's down so much this year that if you have any gains to offset, people tend to trade more actively during volatile years, selling positions maybe you've been holding for a while, creating a lot of long-term realized gains, or short for that matter. That those stocks tend to be sold towards the end of the year to do tax loss harvesting, to offset. So the real heavy down companies we're expecting to get hit even more just because they're down, not because of anything else deterioration wise or news wise or earnings wise per se. So that's something we're keeping an eye on. We don't have a lot of that exposure. We've really mitigated what we hold in our portfolios throughout the year. You've seen that we've been really active, and so we're just keeping an eye on it though, because the markets react. That machines can turn on and markets can react to it, and people just get a little weird when that happens.
What I would say, though, just to add to what she said, there's a point where you want to try to buy some of these really beaten up tech stocks. There's a lot of internal indicators that we monitor, particularly about the NASDAQ. And bottom line is it's too early to call it a bottom. It's just, I mean, I think there's a time to step into these things, and I would suggest January. What we have done, though, many of you have probably noticed that we have used up the lion's share of the cash that we had built up through the year. As we said in our September videos, we would be very assertive, not aggressive, but assertive of going after investments and sticking with things that are working, getting rid of things that are not working, and actually using some ETFs to make market positions in our trading accounts and our growth accounts. So we have that going on. A little bit, I think, certainly we just mentioned taxes. Many of you have called or emailed our offices about harvesting losses. Just so you know, we do it systematically. I've been doing it throughout much of my career. It would be unusual for us to take a stock or even a severe bond that we just don't have much confidence in for 30 days, sell them, and then consider buying them back later if the prices are right. So we are doing that. But with that being said, I do think, and I know Amy and Mindy, and to a degree Brittany, have been mentioning it to clients as they call in, please ask your accountants to call us. It is very important that we coordinate tax strategy and investment strategies, especially in these new markets. There's a fine line. It doesn't mean one's more important than the other, but we both are fiduciaries to you, and for us to not coordinate is a real problem. And I would prefer to talk to the accountants now than trying to talk to them in February when they're going to be busy with a lot of things. So I highly, highly, highly recommend ask your accountants to call us before the end of the year.
Yeah, and on your portal, you have unrealized gains and realized gains reports. You can run them on demand at any time. If you can't find them or if you're not sure where they are, I can run them for you or show you where to go for them. You know, download that and send it to your CPA. Have a quick conversation. You know, we're working with clients as well for anybody that needs some extra handholding in that department to work with the CPA, let them know what they want us to sell, to harvest. There's not a lot left to offset, but there is some, especially even on the bond side. There are a couple that are lower, but it's not a lot anymore. I mean, we're seeing a real pickup in the last couple weeks of prices because of the moves in yield. It's the market directly reflecting or reacting to what's happened with inflation news. So there's, like I said, there's not a lot, but there is some that we can do, and I'm happy to work with your CPA. There's already half a dozen or a dozen clients that I am talking to about this. We ran a report on everybody so that we kind of knew who we should reach out to. We're still going through that list, but we will let you know if there are a lot of gains that you need to be aware of. That maybe you want to have a quick talk with your CPA. So please be proactive in this area with us. We do have a very large client base, but we want to reach out to everybody and make sure they have all the ammunition they need before the year end so they can do what they need to do.
Absolutely. And again, we can't emphasize it enough that it's time to communicate better and not less, which, by the way, this brings up another question. I'm sure you're going to be seeing family members, many of you for the first time in years during this holiday season. I am sure the investment markets are going to come up in conversations. Many of you have asked, are we still accepting clients? The answer is yes. You know, if you have a relative who's confused or scared or their advisor's not doing a good job, please have them call us. I'd be happy to talk with them. Even if we can't help them, at least give them some useful advice of what and how to do. And also, as you know, that we're going to be dealing with the TD Schwab merger next year. There's many people who are trying to independently figure out what they should do about that. So again, we're happy to help out. If people want to talk to us, we're more than happy to have an interesting conversation about what they can and cannot do. And then also, I'd like to say my books make wonderful holiday gifts for any of you who are looking for something fun. Hey, I'm a business person, okay? So the books are available on Amazon. Feel free to order them, and I'll even sign them and autograph them personally for whoever uses them. So, folks, we just wanted to make this a real short video, just to let you know that, you know, like the old saying, this too shall pass, and we've been trying to tell you all through the year. Bear markets are tough. I've been through my fair share, Stephanie as well. Know that, it's knock on wood. I think that you'll be happy when you get your year-end reports that a lot of the damage has been made up. And for me, it's a matter of pride. Those medals behind me speak volumes about our capabilities and our performance relative to our competitors. And I do think that we have found the winning formula to navigate this inflation cycle. I do want to say one other last quick thing. There's a lot of people, I think it's disinformation in social media. There's a lot of discussions back and forth about what inflation is and how to define it. I just want you all to know that, again, I think that we're going to be living with this for a while. It does not mean that you run for the hills and hide. It's not doom and gloom, but there are challenges, and that the investment markets are going to be different over the foreseeable future than they were for the last 30 years. And that's just the way it's going to be. But again, you can make money. You just have to adapt. So anyway, with that being said, Stephanie, anything else you want to say?
No, just happy holidays, and I hope you do get to spend time with your family and friends and loved ones. We'll be in the office throughout, so if you need anything, just let us know. But we definitely want to take some time to recharge. It's been a really long year.
Yes, it has, and thank goodness we're hopefully going to have snow in Lake Tahoe, so you know where I will be through the winter. So anyway, folks, take care. We'll talk to you again soon. Bye-bye.